future city.
15-month-old baby, so it needs to walk, it needs to crawl first, that it needs to walk, it needs to learn
But
its
is
language.
any of that actually happening?
On ground, yes, there are certain. I think they're just starting work on the future city office also very soon.
Okay. Let's talk about neopolis.
So if you enter into Neopolis, there is no apartment less than 3.5 crores.
Yeah.
Most developers seems to be focused on luxury development.
The new GST reforms that are what are the changes, or how is it going to affect our real estate?
I mean, lower taxes is always a happy thing, but the reduction of GST translating into a price cut will only happen like in about 2 years or 3 years.
What is the kind of investment that a person needs, or a 25-year-old needs, to invest in real estate?
Today, for a 25-year-old, he can enter a real estate market with as little as 5,000 rupees.
You can enter with 5,000.
So there are options like REITs,
Yes,
which are coming with grade A, very good properties. Like Embassy REIT is there, Ranger REIT is there, SocialPost has recently, Blackstone SocialPost has come up with a REIT.
A new project called RRR. What about it? Do we have any updates?
There seems to be a plan right now for the southern part of it, and they're hoping to complete the other part very soon. I wouldn't recommend any format of investment.
What advice would you give for a first-time buyer?
For a first-time buyer, first of all, if you're buying residential real estate.
Today we are in talks with Mr. Sudamsh, who is the project head at Orange Realty and has a decade or more experience in Hyderabad's real estate. First of all, it's really a pleasure having you here. I wanted to know your experience with real estate in Hyderabad.
Thank you so much for inviting me. See, I've been in this industry since 2006-7. It's almost been 18 years. The city has evolved quite a bit since then. Like back in the day, we used to have limited number of developers, limited number of players. So the concept of gated communities has evolved quite a bit. Back in the day, there were very limited gated communities, but a majority of inventory today has been gated communities. Everybody has understood what gated communities has been in the city. We were fortunate to be working on some of them and developing some of them. If you look at the evolution of IT space in the city, back in the day it used to be Begumpet, Banjara Hills and all this. But high-tech city today has evolved into a proper IT district, which is in line with any other downtown in any other city in the world. So that evolution, you were able to visualize from 2006-7 onwards to till date. The transition of the city, that has been phenomenal. Back in the day, what we would do in a year, probably today developers are doing in a month. The number of transactions, the number of units, that has grown rapidly. We've seen 3 cycles. We had a great bull run in 2006-7, followed by a financial crisis, and then the whole lull after that. Then we had a big uptick after 2014, 15, 16, then preceding to COVID, and COVID, we had a bad time at that point of time. Then we had a great post-COVID run, and then we had another we could say a stagnation cycle at the moment. So there have been multiple cycles where, real estate has, there's been like up, down. There's been a constant interest. Some great projects have come up. Some great inventory has been built. The experience for the customers, for the individuals that are in the city, it's dramatically improved since 2007 onwards, because gated communities today have become self-supporting. They have created their own social infrastructure. They've created all kinds of physical infrastructure for themselves. So even in terms of the expansion of the city, back in the day, you would refer everything from Banjara Hills. This is X kilometers from Banjara Hills and all. Today, we start referring from Outer Ring Road. Outer Ring Road itself is a 160 kilometer, circumference. So you start referring everything. The city has expanded from being a 900 odd kilometer city to about 6,500 square kilometer city.
Right.
It's been huge. The shift is almost 10 folds in the last 15, 17 years. To be able to visualize or even look back and see how fast and how rapid this change has been, it's just phenomenal.
Yes, I think so I was in Australia. So I used to come back to Hyderabad, say, every 6 months.
Okay.
And whenever I came back, say twice a year to Hyderabad, I see a new Hyderabad.
Right.
So at
Yeah.
that time, I think from 2000, like you said, 16, the growth and things have been very
Yes.
rapid
Yes.
for
Yes. Yes. Yes.
Hyderabad. Like in every 4 months, 6 months is a lot. In every 3 to 4 months, we could see a
Yes.
lot of
Yes.
changes happening. But where is it standing now compared to any other city in India?
See, compared to any other city, we are a service industry dominated city, like a Bangalore, like a Pune, like a Bombay, where services form a very big part of our economy here. The service growth has been very good. The global capability centers have chosen Hyderabad as one of their options. We get about 15 to 20% of global capability centers that come into India. So there's been a lot of interest in Hyderabad in that regard. There is a lot of talent pool available. There's a diversity factor also. It's a very nice cosmopolitan city. There are no language issues or
Right.
regional issues at this point of time. It's a very peaceful city. We accept people from
Yes.
every country, every part of the country, different countries. So many people have made this city their home. So the growth has been very good in the last at least the 12, 13 years. The growth has been phenomenal. So that continues. The wage growth has been a little muted because of the global environment, but the job growth has been good because of the both domestic companies as well as the GCCs coming in. We have not seen any major disruptions or job losses as far as Hyderabad is concerned.
Okay.
So the going seems to be good for the moment, in terms of job growth. But in terms of real
Real
estate
estate.
prices, that's a question most
Yes.
people have. We've had a period of stagnation in terms of prices. It is not really fallen. The prices have not really fallen, but there hasn't been so much growth in prices because we had a phenomenal price growth in the last 10 years that we've been
Right.
accustomed to.
Right.
The last 3 years seem like a little muted in terms of growth,
Exactly.
but transactional average numbers are very good even today. The number
Okay.
of transactions are good. Even in terms of absorption of IT space has been very good. We've had a
Is it?
great
Okay.
last 5 year window where absorption of IT space, especially in the core belt, has been phenomenal.
Okay.
Today we are doing very good numbers, which we were doing pre-pandemic. We've beaten those numbers also.
Okay.
So looks like
Okay.
everybody is back to office today.
Yes.
The work from home situation is
Yes.
easing.
Right.
Everybody is going back to work. All the big names, whether it is in the pharmaceutical industry or biotechnology industry, or in terms of the regular IT services, we seem to be one of the 5 options that exist in India today.
Okay.
We're capturing about 20% of that interest, and those are adding to good number of jobs. And these are very good paying jobs.
Okay.
They're not. They bring
Got
in
it.
good value and thereby adding more opportunities. Like if an IT job were to come in, then it adds something in the retail space, in the construction industry, so and so forth. So that way the economy has been growing. We've very good numbers in terms of our tax collections, our per capita income growth. So that trajectory continues.
Okay.
But it's a great time to be in Hyderabad real estate. If you're a residential buyer, you have a lot more choice. It's still a buyer's market. You still can take your time,
Yeah.
gauge different opportunities and take a decision.
Talking about these three cities, Mumbai, Bangalore, and Hyderabad, right now, in terms of real estate, which city, according to you, is doing well?
See, all three cities are at a different growth stages. It's very difficult to be comparing Bangalore or Hyderabad and Mumbai. Three are very, very unique cities, very different cities in that space. We've had a great 10-year run when they didn't have that kind of markets.
Correct. Yes.
Their markets picked up only after 21, 22, but we had a great 10-year run before. But they had a very good. So different cycles, different experiences. See, today Bangalore is about 5 cities within itself. There are like multiple Bangalores
Correct.
within Bangalore.
Yes.
So
Yes.
each micro market does very differently. The absorption rate, let's say from an IT perspective, Bangalore always does better than Hyderabad. We're I mean, we're always trying to catch up to Bangalore. It's the big brother there.
Okay.
So it is always aspirational as far as IT services industry is concerned. Bangalore is, and there is a very vibrant startup culture today. Many
Correct.
big names
Yes.
from Indian startup ecosystem are coming out of
From
Bangalore. So that's a different world altogether. And they're doing very well. Their absorption numbers are very good. Their growth stories are very good. When you compare it with Bombay, Mumbai, for instance, it's a different industry. It's a financial capital of the country. Yeah. There are different industries that exist there. Their growth trajectory, and Mumbai real estate has been like, on fire right now. I mean, in the last at least 2 years, the price increase has been phenomenal. The numbers are so mind-boggling. For somebody sitting in Hyderabad, we're thinking 15,000 rupees or 20,000 rupees is high. But when you go to Bombay, it's like a lakh per square feet, 55,000, 45,000. Some areas in Bombay are commanding that kind of rates. So it's not all the locations.
Some of the prime locations.
So they have the new airport coming up in the Navi Mumbai area. Right. That area seems to be doing like a lot of opportunities. A lot of redevelopment projects are happening in Bombay. So they're already in the third cycle, second cycle, where apartments are already older. They're going for redevelopments today. Right. And every city seems to have discovered high rises. Right. That's one common phenomenon that's happening. Bombay is going higher. Hyderabad is going the highest. So Bangalore also is doing a lot of high rises in that sense. So every city seems to have discovered the vertical buildings, and people are also preferring them with regard to ventilation or with regard to light and all that. So there seems to be a customer preference also for high-rise building, which is common across all the three cities. Hyderabad presents you an opportunity to enter at a slightly lower ticket price, whereas Mumbai doesn't allow you to do that. It's a very expensive city in terms of real estate. But Hyderabad and Bangalore both give you that opportunity where you can enter into a micro market of Bangalore or a micro market of Hyderabad at a reasonably very good cost, and you can still commute to the downtown and work there and so on and so forth. Yes. So it presents very, very good opportunities for people. But for some people, the certain jobs exist in Mumbai. For those people, they ought to be there.
Yes. So do we see Hyderabad being Mumbai or Bangalore? Do we see that happening in our near future?
See, Hyderabad has had a phenomenal growth trajectory. It need not be any other city. It's a city.
In terms of, I'm talking in terms of numbers.
See, in terms of certain years, not all the years, in the last 5 years, I think at least in 1 or 2 years, we have done better office space absorption numbers as Bangalore. Maybe according to some reports, in one of the years we've done better. But it would be phenomenal if we can do IT absorption rates as Bangalore is doing.
Right.
See, as Hyderabad is growing, so is Bangalore.
Right.
So if we are going at about 12%, they're also growing at a higher base. They're growing. So in terms of IT absorption rate, we are also growing. They are also growing. So where Hyderabad does compare with Bangalore and Mumbai is infrastructure. We were a little ahead in terms of infrastructure. Our peripheral infrastructure, like Outer Ring Road, for instance, is a phenomenal infrastructure. But Bangalore is doing great in terms of public infrastructure, public transport, like the metro corridors are all up. Some of them are up and running. We somehow seem to have a little lost on the phase 2, phase 3 of metro. Yes. So that is some space that we could really compete with Bangalore in terms of, doing a lot more on radial roads and on infrastructure. Our strength was infrastructure. We had great infrastructure in the last 10 years. For instance, Hyderabad is one of that major metropolis which seems to have solved its water problem.
Yes.
So we don't have so much water as a problem. In terms of social security, in terms of quality of life, we still do much better. Our air quality index is reasonable. We cannot say it's good, but it is compared to other cities, it's reasonable. Education and healthcare, we do very well. But in terms of infrastructure, we constantly need to invest. We constantly need to, and we are a nice circular city. So it helps. We can expand in all the directions. But somehow our IT has been struck to one location. But if there is a way that we can get, if South Hyderabad were to take off.
Yes. Do we see IT coming towards the south of Hyderabad?
It's a long way. South Hyderabad needs some time. I mean, it's just started. The story just started. Until the last 3, 4 years, it was non-existent. As a micro market, it is evolving right now. So the evolution will take. High tech city started in 2003. It took about.
Right.
It's
Yes.
it will take its own time. If there is a consistent focus of successive governments on a particular location, then definitely that particular location will take off. South seems to be favored at the moment with the current dispensation. If there is a continued focus, like for instance, high tech city was a continued focus
Yes.
between
Yes.
2000 to 2000, and even today,
Right.
right? So there was a continuous focus on that. You had metro connectivity bought in. You tried to uh, clear traffic roadblocks around that. Look, I mean, whatever small
Correct. Yes.
flyovers, road
Yes.
widenings, multiple and land allocations for IT companies. It was auctioned in a way that it was available for IT parks to be built. So that kind of infrastructure, if South is able to, airport is one interesting story. They're going to be doubling the capacity. So there is going to be a lot more that airport will do. We have one of the largest land parcels as far as the airport is concerned. We're one of the
Hyderabad?
largest
Okay.
airports in the country.
Okay.
That kind of land is not available with any other airport.
Okay.
So a lot of airport related, now retail is catching up there. A lot of new offices are coming up in the airport.
Correct.
If you see, educational institutions have
Yes.
come up within the airport
Yes.
complex. So a lot more is happening in terms of that location. If you see, a lot of educational institutions have come up in South Hyderabad. You see close to about 15, 20
When you-
schools have come up
So
there.
when you say South Hyderabad, can you give us a list of what comes under that?
So, in a generic sense, we could start with anything from Shamshabad all the way to FCDA, the future city today, and Adi Batla. So, general
Yes.
classification wise,
Right.
this is more South Hyderabad. Let's for now, let's look at airport being the center of
Okay.
it, right?
Okay.
Because you have
Rajendra Nagar.
Rajendra Nagar. Rajendra Nagar is still looked at westish.
Oh, is it? I thought
as
it
in
comes under this.
I mean,
Okay.
Budwell.
Right.
You're closer to, so let's say anything from Rajendra Nagar to Shamshabad,
Okay.
then to Pedagolkonda, then Tukuguda, future city, and so on and so forth. It's a geographically large area.
Yes.
So it has 3 state highways and one. I mean, there's a national highway, 2 main state highways. So there's a lot of area. There's a lot of potential. If whatever we've listened to or we've heard, government is making some progress with the new 300 feet road, or with looking at expanding on the road network within the FCDA area. If that were to happen, there's a lot of opportunity. There's about a good 20-25,000 acres that is available there, and something phenomenal can come about. If it's a long story, cities
Right.
need a lot of time. So if somebody is aiming to build a city, it is a 25-year story,
Right.
and 25 years
But
of focus.
what about the future city?
Future City, again, I'm telling, see, they've just started work. It's just a 15-month-old baby.
Okay.
So it needs to walk. It needs to crawl first. That it needs to walk. It needs to learn
But
its
is any
language.
of that actually happening right
On ground, yes, there are certain. I think they're just starting work on the Future City office also very
Oh,
soon.
okay.
The Skill University is being done. See, it's a large land bank, and collecting land is a very difficult
Yes.
activity in
Yes.
this country. It takes a significant amount of political will, bureaucratic will, time, energy, money, and everything. So to do that, but on ground, you could see visible changes that are happening. See, not at the pace that people would. It is
Want
not.
it to be, yes.
It is not an animation that you can speed up things. These are social issues.
Correct.
So it takes some time. Like for instance, they've developed the layout. The first 500-acre layout has been developed.
Okay.
So they're allocating plots for the people
Okay.
who've surrendered the land. So they're trying to speeden up the process. So it is happening, but it is a couple of data centers have come up. The Skill University is happening. They're building a couple of office spaces there also. It will take some time, but it is happening. It is a slow process, but that's what I was trying to tell you also, that it will take at least 8 to 10 years before you would see anything meaningful happening, where you could present to an international investor and say, listen, there is an opportunity here, or a domestic investor today.
Now, will the change of government have an effect on that?
See, once the developmental activity takes a particular pace, any government, if it sees an opportunity in that, in that direction, will not do that. As in, if there is, I mean, there is the term of this government is still there. It's a very, it's not even
Yes.
halfway through. So there
Yes.
is significant term of this government. And see, one South has been neglected to say that, also it is abutting a certain part of the state Telangana, which is extremely backward also. It will give a lot of flip to those areas, like, a part of Nalgonda district, a part of Mehboob Nagar district, which abuts the fourth city, which is closer to that. These have did not have any major growth centers for them, or any employment generation center. If any government that would come in would not want to, like, if some format of growth center is established, you want to continue that
Right.
momentum.
Right.
Like, for instance, if you present something as an industrial corridor or an opportunity corridor, the next government will only improve on it. The next government will only try to, and it is one parcel, one location where there is a lot of government land exists today. So it's easier for government to move,
Yes. Yes.
and do something for the next
Yes.
government. This government is only going to make the stepping stones for the next government. The next government is going to make stepping stones. For instance, if you were in Hyderabad, like, the first Chandrababu Naidu government did few baby steps. The next YSR government came in, they did the outer ring road, the airport. Then the successive KCR Garu government came in. They did a lot more in terms of IT promotion, expanded it into other parts, ancillary parts, like Gachibowli went on to become financial district.
And
now
then-
today Neopolis is up.
Right.
Yeah.
So now that
So it
you
takes this took about 25 years. From 2000 to 25, it happened very slowly, very gradually, and lot of private participation has to come in, because these are not government buildings. These are all private parties who need to see the value in their investment. So these people will start only coming after 5 years, 8 years, 10 years. So when they see real value of development, where there is social infrastructure available, so it takes some time for it to happen.
Right, but I don't know. It was my observation. Let's talk about Neopolis.
Yes.
Do you think there's this stagnation that's happening, especially near Kokapet, because of the change of the government?
See, Neopolis, in the sense that it is Neopolis or Golden Mile, and Kokapet and Gandipet. The stagnation is not because of the government, or you could see it more from a supply side issue.
Okay.
If you look at Neopolis, if you enter into Neopolis, there is no apartment less than 3.5 crores today.
Yes.
The minimum ticket is at about 3.5 crores today. Most of developers within that catchment, whether you take Nanakramguda, whether you take Kokapet, whether you take Gandipet, all the 6-7 locations, most developers seems to be focused on luxury development.
Yes.
Most units are about 2.5,
Yes.
3 crores. And we are seeing a general problem of traction in that particular category of units,
Okay.
between that 2.5 crore and upwards of that category.
Right.
In so far as Neopolis in specific is concerned, it has nothing to do with the current government, because the current government is continuing with the infrastructure development within Neopolis. Recently, they've opened the interchange also. So the current government has not done anything negative in this regard. They continue with whatever commitments that were made, and the developers have already taken the plots and they've started to work on it. But the category of product that is there, that seems to be a little problem.
Okay.
Because everybody seems to be wanting to make for the luxury Hyderabad.
Yes.
And the density of Neopolis is another challenge, because Neopolis has a very high SFT per acre. Typically, it's going upwards of 3 lakhs to about 5 lakhs, which is unheard of in Hyderabad real estate, or even globally. There are very few cities in the world where you build 5 lakh square feet, 3 lakh square feet. Hong Kong, Singapore. These
Right.
are high density islands. For a circular city, for a Hyderabad, to be building this kind of FSI is a little, for people to digest this kind of thing is a little difficult. But people continue to build, not only in Neopolis, even if you look at Kokapet, even if you look at Gandipet, the FSI is a challenge, the density per acre is a challenge. So the inventory that people are bringing to the table, as developer community, we are bringing to the table,
Yes.
that seems to be not in line with what the customer actually wants.
Right.
So that is a challenge. That is not a demand problem or a government problem.
Okay.
It's pure play a supply side problem.
Supply. Yes. And now we've seen the new GST reforms that have
Yes.
come. So what are the changes, or how is it going to affect our real estate?
So, in terms of real estate, the new GST has reduced GST on a lot of construction products also. Like cement has been brought down from
Right,
28% to 18%, bricks and granite and marble, and they've been brought into the 5% category. I mean, lower taxes is always a happy thing. But the reduction of GST translating into a price cut will only happen like in about 2 years or 3 years time,
Okay.
because
Okay.
what has happened is whatever material you've consumed up till now, you've already paid a higher GST.
Correct.
So the new GST will come in, let's say, from 1st of October. I mean, and then from then on, you'll have to start procuring new material.
Right.
And it might not be so significant in terms of real estate
When
prices.
will we be able to see those significant changes?
Overall, in terms of construction cost, if you take it, the material that has changed, these account for about, let's say, about 11-12% of 10% of the overall cost in terms of percentages, out of which there is a marginal change.
Yes.
So I don't know if you would see a real change on ground with reduction of, but what it does is that it makes life simple for us in the sense that there are only two categories now to work with. There's an 18% and a 5%, and there is no confusion in that regard. But if you even were to see a change, it would take about a year and a half for that to come into a meaningful, consumption, and then that is absorbed, and then we change the prices. It will take at least a year for that kind of GST affected changes, because significant cost is the land cost.
Right.
So until that changes, you would not see a meaningful movement of the needle in terms of price.
Buyer will not see any significant
Very
difference.
small change. Very small change.
And talking about nowadays, people at the age of 25 are looking to invest in real estate.
Yes.
And I think that's where the youth is. I mean, it's a good thing, first of all, because I think before this generation, people at 25 never thought of investing on real estate. That was never an option. Investing was never an option. Real estate was not even any option. What would you say? What are the options that are available, and what is the kind of investment that a person needs, or a 25-year-old needs, to invest in real estate?
See, the general savings culture has moved into an investment culture right now.
Yes.
The previous generation was using simple products like a fixed deposit or a simple real estate, buy a home, rent it out. Today, for a 25-year-old, he can enter a real estate market with as little as 5,000 rupees also.
He can enter with 5,000?
Yes. So there are options like, REI REITs, which are coming with grade A, very good properties, like Embassy REIT is there, Ranger REIT is there, Salarpuria Satwa has recently, Blackstone Salarpuria has come up with a REIT. These are high grade products. They will give you both investment growth as well as some form of dividend yield in terms of rental yields coming in. These are very good investments to come into to begin with, to understand. These are simple products. These are market regulated products. These are SEBI regulated products. And these are coming from developers and fund houses which are of highest grade in this country.
Okay.
And these are leased by some of the best global companies, Fortune 500 companies, some of the best domestic companies are leasing these spaces. So they have very good portfolios, and one can start there. The second option in terms of fractional ownerships is micro REITs. That is one other opportunity that you can enter. These are again regulated products now, but you don't still see a lot of penetration of micro REITs, but they will come in the penetration will be much higher in the next 2 years, 3 years, 5 years. So these are two instruments for a younger person to come in to pick up real estate as an investment opportunity. The traditional products, Yes.
REITs
Yes.
is the option
Yes.
for people
Who
looking
can
to
enter
invest,
into, yes.
and the amount can literally just be
Yes,
5,000.
5,000 also.
Right.
As low as 5,000
Okay.
also. You can start there, build up a corpus, build up a portfolio. Today, everybody is looking at diversification as
Correct.
an opportunity. If you're looking at equity markets, you could look at the regular equity markets and also look at least some part of it being in your portfolio, whether it is through REITs or whether it's through this one. If you can always access the regular old school real estate products like plots, there today home loans are available to
Yes.
buy plots also. That is again, you can spread it over a period of 8 years, 10 years, and you can buy. That is a traditional product. If you want to build a house later on, you can buy it, or for consumption or for investment. That is an opportunity that exists that can be utilized, also. Other than that, in terms of investment for a young 25-year-old, if you're doing very well, you could start buying the conventional properties, move up the ladder, buy a house or buy a commercial property for yields as such, and also for appreciation, which some people are using their EMIs today to this effect, to buy and then flip it toward, buy initially and then flip it towards the end of the projects and so on and so forth. Slightly risky strategy,
Yeah.
very, very risky strategy.
Yes.
But I've seen a lot of youngsters trying to do that. It's a 3-year, 4-year investment cycle, and you pick it up at the beginning. You could do a good number there also, but if the market doesn't favor you,
Exactly.
you could be in a format,
Yes.
in a space that is not
Yes.
comfortable. A lot of people have done it in the last 10 years when the
Okay.
market was good. I don't know if it's a great thing to be doing now in Hyderabad market at the moment.
Okay.
You could come back to it later, but not at the moment. It might be too risky. But you could stick to the basic regulated products. That will be a great space to start with. Once you build a significant corpus, you can move, let's say, from if you've invested in basic products to begin with, small corpuses, you build a significant corpus about 10, 20 lakh rupees, then you can move into a slightly higher grade product,
Okay.
utilize that fund and improve your, you
Right.
can go on with the cycle like that.
Right. So, like you've told me before, that the investment of a 25-year-old can be different, and then of a 35, and then of a 45.
Yes.
Can you tell us about the difference between these at the age of 25, at the age of 35, at the age of 45? What is the different kinds of investment options available?
See, the investment opportunities are quite similar, but when should, depending on your wage growth, like every industry has a different wage growth cycle. For
Right.
instance, an IT employee starts a good wage growth cycle at about 25 years. Because IT industry, you start moving
Yes.
up the ladder, your wage
Yes.
growth could be about 3%, 5%, 8%, depending on how good you are in terms of. If you're looking at a medical professional, his wage growth starts at about 35.
35.
Right? If you are a construction industry professional, your wage growth starts at about 40 plus.
Right.
So it depends on where you hit the wage growth cycle. You have to choose your products accordingly.
Correct.
So you have to build your portfolio according to your wage growth cycle. So for an IT industry, they can come in very early also,
20.
because there is a significant wage growth cycle that exists. The opportunities are there today. You're not, if you see that your growth is good, then you can start off early 25. So it depends not on, on your profession, what stage of your career, what kind of financial security that you have, because at the end of the day, there's certain risks associated with real estate
Yes.
products.
Yes, definitely.
Once you look at any product for either reselling or renting or any of these activities, there is a significant risk, because market cycle is very important. If the market cycle is in your favor, it is good. But if the market cycle is against you, sometimes your investment window from 5 years could change to about 8 years. Then your investment. So you have to be very clear about what is your investment window, what kind of risk can you absorb. It all depends on your wage growth cycle that exists at that moment.
We all know that there's this new project called RRR.
Yes.
What about it? Do we have any updates?
See, RRR is one other infrastructure project that is coming up in terms of trying to improve the connectivity around Hyderabad. There, there seems to be a plan right now for the southern part of it, and they're hoping to complete the other part very soon. It Right now, it should be looked purely from a as a road network at this point of time. Nothing. I wouldn't recommend any format of investment at this point based on RRR.
RR. Okay.
You can wait out, get a little more clarity. It is a long project. It will take some time, and what shape and form it will evolve into, it will take a lot of. We have a lot more opportunities that exist currently to the existing outer ring road.
Okay.
Most people should stick to it. RRR based investments is for a slightly bigger ticket investor who is buying large chunks of land, let's say about
Right.
5 acres, 2 acres, 10 acres, kind of an opportunity investor. Small investors should ideally be staying away from RRR based investments. It's too early. Let there be a published master plan, like how we have a master plan, a full radial network of roads and everything. Once that comes up, then you could start deciding on how do you want to go about investing in that particular catchment. And it opens up a large parcels of land. With outer ring
Okay.
road being about
Uh-huh.
160
Yes.
kilometers, it has opened up so much land
Yes.
parcel.
Yes.
RRR is even bigger than that. So
Yes.
there's a lot more land that's going to be opened between ORR and RRR.
RRR.
So people should wait for a lot more clarity. It's a long project. Let the government publish all that. So there's a lot of unverified information. Every single person in the catchment claims that our land is abutting RRR or our project is abutting RRR. So
Okay.
people should verify it. Consumers should verify it. Maybe wait out is also a great idea. Not rush into that market at this point of time. For big ticket investors who are willing to take a risk, it's a very good risk to be taking at this point. They can buy bigger chunks of land, wait out a period of about 3 to 5 years or 5 to 8 years, and see the impact of it playing out in the longer term.
5 to 8 years. Okay. And what advice would you give for a first-time buyer?
See, if you're a first time property buyer, it's a very intimidating experience. You're going to be coming across most terms like for the first time: square
Yes.
foot, square yard, this,
Yes.
that, common area, super built up area. For a first time buyer, first of all, if you're buying residential real estate, please take your time. The first and foremost advice would be take your time. Try and understand the micro market that you want to be in. Don't rush into an opportunity because somebody is recommending it to you or whatever it is. Get a very detailed understanding of what your budgets are. What is your range? For instance, if it's 1 crore, 80 lakhs, 1.5 crores, set out a budget range first. If you're let's assuming you're a residential investor, you're looking to buy your first home, you need to set out your budgets first. And then you need to evaluate the catchment that you want to be in. Understand the social infrastructure that exists. Again, it is very important to start that investment journey in your wage growth
Right.
cycle. It will be comfortable for you.
Yes.
Don't wait too long or don't jump in too early. It's very important to time that wage growth cycle and then get
Correct.
yourself prepared for it. If there is a dual income household, you can average out between both wage growths and then take a call. If it is a single income household, it's very important to get this thing right. The third thing is, and most importantly, each developer metrics are different for built up area, carpet area, super built up areas, and all that. Once you've shortlisted it, it is a good idea to prepare an Excel sheet because it's not exactly apples to apples comparison. Somebody's 1200 square foot house would be different from somebody else's 1200 square foot house. So then you have to evaluate whether you need a gated community or an you're okay with a standalone community also. This is again a lifestyle choice, whether you need those amenities, because you're going to pay a very huge premium for it. And also don't look at sticker prices alone, because there's another 20% cost after that. There's GST, there is stamp duty, there is registration charges, plus there is amenities and every infrastructure development charges and so on and so forth. Try and understand the overall cost of your purchase, whether it is home insurance cost, whether it is home loan processing cost. Factor all of this into your budgets beforehand, make a detailed chart of it, and then look at the opportunities that exist. You could go plus or minus 5% depending on how good a property is. Then you have a certain category of builders. You have great, a slightly national builders to regional builders to a local builders. If you have, then you start evaluating what kind of opportunity
Project.
should I seek in, and then you take a call. If you're a first time residential property buyer, if you're a first time plot owner,
Commercial.
commercial, I mean, if
Yeah.
you're a plot buyer or
Plot
a
buyer.
land
Yes.
buyer, then it is very important that you have a very thorough understanding of the legal title of the property. It is important for the first category
As
also.
well. Yes.
It is very, very important when you're buying land to get an independent legal opinion done from a lawyer that you know or you trust or you think is competent enough. So that is the fundamental point where you start. If
Okay.
you have a thorough legal understanding, also try and understand what kind of infrastructure that is going to come up in that catchment. That is going to play a pivotal role
Yes.
in how that opportunity improves, or how you're going to make money over it in the long term, or how the social infrastructure would help you when you build a house there, or when you start making
Right.
something out of it. So that is very important. Also, don't go by the hype cycle. Do an independent evaluation. Visit that location, that catchment multiple times. Visit in daytime, visit in night time. Try and understand how the social infrastructure changes, because today people are evaluating opportunities 30 kilometers, 40 kilometers outside their workplace zones.
Yes.
Try and see what kind of times it is taking to travel to those destinations, how comfortable with you, because it's very important that only one person in a household is traveling long distances. At least try and evaluate if you have the school zones that are in your comfort space, or the hospitals, or whatever that you require. So you minimize discomforts to yourself and try and pick up a property. Once you pick up a property, once you shortlist, then one more important thing, a lot of people, most people in this industry are convincing you to buy. They're trying to sell it to you. They're not helping you buy it.
Yes.
You need to seek a counsel which is helping you buy. There's a very big difference. Most people are trying to sell a house to you, whether it is through their Instagram ads, or whether it is through whatever it is. Everything is so glossy and right. But you have to go look at the progress of the project in the first 3 months, first 6 months, first 9 months. Sometimes it's okay to wait out. It's also important to time the cycle of the project. Sometimes you do get benefits going early, right? You stay at ground zero level, you get good discounts or whatever. But the ideal time would be when a significant progress on the project has been made. Where you can see that timeline is now more or less certain that it will be a plus or minus 6 months, 8 months kind of a timeline. Most people try and go too early or too late. Like some people are very comfortable with buying a fully done house. Some people go in very early, trying to get a deal and
get
all
a
that.
better deal. Yes.
One important thing you need to understand is, once you've identified a location, there's always another good developer. There's always another good project that's going to happen.
Yes.
Don't get yourself pushed into an opportunity. Take your time, go multiple times, evaluate a property, talk, look at the progress, and then decide on how you want to proceed with that.
And what about a first time investor?
See, from an investor, you should first of all you should look at the timeline. What kind of timeline? A lot of people get in, but it is very important to plan your exit strategy, right? So when you are buying something, somebody is selling it to you. Like the developer is approaching you through his whole marketing campaign, or his army of marketing people, whether it is through property consultants, whether it is through your digital media, or whatever it is. So you need to plan your exit strategy very carefully. 5 years down the line, how am I going to exit? If you have an answer to that question, 5, 10, 15, 20, whatever your investment horizon that is, but you need to have a very realistic horizon about when would you get out of this property, and at what levels would I be comfortable getting out of this property. Am I borrowing too much debt to get into this opportunity? What kind of debt is manageable for me? What kind of interest rates or interest that I'd be comfortable in terms of my without compromising my regular lifestyle? Would I be comfortable doing this? All those are important factors. Other than doing your legal due diligence, doing your social due diligence, all that plus
That's
this.
the primary.
The primaries being primaries,
Yes.
but you can look at all kinds of secondaries in terms of how good the developer is, the developer reputation, because some properties from some developers have had a very strong knack of giving very good results. As in, like, the developer reputation is built because obviously they're doing a good job at it.
Yes.
They're building good quality products, they're doing, and very important from an investor point of view is what is the maintenance after the developer leaves. That is fundamentally most important thing. If you're looking at some of the good plotted development projects today, where the values have appreciated considerably, is where the maintenance has been good, where the developer has
Okay.
created a mechanism for maintenance. So even in commercial buildings, the maintenance aspect is the most, because as a tenant, they would want highest level of maintenance that needs to happen. So wherever a good maintenance infrastructure, whether it is through a registered cooperative society or some format of maintenance being extended by the developer, or a very good third party agency coming in, that plays a very pivotal role in terms of how your property will appreciate. So you have to have an understanding of what kind of maintenance mechanism exists after the developer leaves. It's all rosy until the developer is there.
Exactly.
If you look at some of the older colonies where you see, this colony has very good property values, it is because the community there is very active. They have taken an active interest in maintaining the community park, or getting the street lights done, or planting
Right,
trees,
right,
or getting the CCTV infrastructure. So it's very important to focus on the maintenance aspect,
Right.
other than all the other details that we've
Right.
spoken about, how a first time investor in terms of buying a property should look at.
Yes, yes. The primary factors have still to
Yes,
be
yes.
looked upon, and then the after, what happens
Yes.
after the developer
Yes.
leaves is very important.
Yes, yes.
And if I were to ask at this point of time in Hyderabad, do you think, in terms of investment, where should we invest? In a residential property or or a commercial property?
See, if you're looking at residential property investments, the yield curve is very bad in terms of rental yields.
So
if you're-
rental yield is bad?
rental yields is very low for the kind. I mean, we don't
Yeah,
do
comparatively.
yeah,
Yes.
we do about 2.5, 3.5%,
Yes,
and so it doesn't support an investment, making an investment in
yes.
constructed real estate. But if you're looking from a rental yield perspective, a commercial real estate is good.
Definitely.
But in the last 3-4 years, the appreciation in the rental, in residential real estate, has been much better than the commercial real estate as such. Commercial real estate appreciation is purely determined by the ability of the tenant. How high can you command in terms of the rentals? That will determine the price of the property.
Okay.
There are certain factors that, this street can only command so much business, and so much rental yields will come through it. Like, typically nobody would want to pay more than, like, if it's a high street mall, nobody would want to pay more than 15% of their turnover. If it's a local retail, nobody would want to pay more than 6% of their turnover. As so, there is a predetermined factors around which the property prices move. So there are certain factors. With regard to residential real estate, it is a lot more factors. Like, for instance, how good the community has evolved into. What kind of social mechanisms exist there. In some communities, there is an active churn happening, wherein people, where the community has evolved into a very nice social fabric, wherein they are only pulling in new people, like existing members want their relatives, friends to come in. So the social fabric makes very important as to how the property values will appreciate in those communities. And then the brand, certain brands command
Yes.
certain premium.
Yes.
So people want to be living in those communities. It
Correct.
adds some kind of social value to them.
Right.
So there is a difference in terms of which one do you want to choose, which one. From a rental yield perspective, the commercial real estate is a very good opportunity. You could also look at the fractional ownerships that we've discussed. If you're
Yes.
looking at commercial, you could straight away focus on REITs.
Yes.
These are some high grade real estate assets that are existing today in the country. You can focus on them. They're highly liquid. They don't have the
Yes.
whole problem
Yes.
of, how do you sell, how do you exit.
Yes.
These are simpler products to add, very little investment into
Yes.
it. The other part, you have to do a lot. For residential, you have to focus on maintenance. You have to individually tenant it out.
Right.
Usually in commercial and fractional ownerships, all these problems don't exist.
I wanted to cover like 2, 3 basic questions as to which is the market right now that is going to appreciate in Hyderabad? I mean, location.
See, if you're looking at coming in as a uh, in the short term, we might not see too much movement in terms of residential prices. But in terms of land as an opportunity, South Hyderabad, beyond the outer ring road, between on the Srisalem highway, seems to be a good space right now. In general, the closer to outer ring road you are in safer hands as far as plotted investment is concerned. With regard to housing, I wouldn't see that there be so much movement in terms of micro market moving like dramatically in the next 3 years as such, if that's the investment horizon that you're looking at. But in the longer term, you could see a good appreciation in some of the premium markets like neopolis and those.
Okay.
Also in the upper west markets also you could see some format of appreciation coming in. But right now, with the kind of inventory in particular categories, see, again, it depends on a micro market, for instance, where if you look at Nanakramguda, Kokapet, Gandipet, this micro market, the smaller ticket size inventory is not there. Like, for instance, sub 2000 square foot, or between 1200, 1500, 2000 square foot inventory, where we see if it's a quality product, there could be a much better movement in terms of opportunity, in terms of price movement in this category. But if you're looking at a slightly more luxury product where the inventory is very high, you might not see a movement very fast in that particular category. So it depends on which category that you are looking to invest in and which category that you want to own it as a home. Depending on that, the price movement could be very different in a similar catchment.
Okay.
So that is one thing that. But if you're looking at plotted development, you could look at Sri Salem Highway. You could look at anything close by to the ring road.
Okay.
This closer to the ring road in the westish markets. That's a good space to be in. Entire south again is dependent on certain tailwinds happening, like the future city taking off, but that's a risk that you should be willing. If that kind of developments do take place, then it will give you a lot of opportunity in terms of growth in that particular catchment. But this government seems to be focused on that area, so it's a good bet to be focusing on that area also.
And also, now that after the change of government in Andhra Pradesh, many people want to know if, in just say, they want to invest in Andhra Pradesh. Is it a good idea right now?
See, if you're specifically asking Andhra Pradesh as in Amravati, their
Amravati.
capital city, see, Amravati and Hyderabad are very different cities, and they're very different micro markets. See, it's a very young city, so you would find opportunities right now, but it is a long horizon. We still haven't seen a large or significant amount of private investment going into Amravati as such. We still don't have a lot of grounded projects yet. So the private investor has to first go in, present an opportunity for smaller investor to come in. It looks like it is going to take some time. Right now, it is the public infrastructure that is getting built in. A lot more confidence building measures have to come in from the government side in terms of building confidence for Amravati. Amravati is a great long-term story, but you have to be a patient investor to get into that particular catchment. And any other city in Andhra, Vijayawada, Vishakhapatnam, they're very sophisticated in terms of real estate.
Okay.
They're all over the world. Today a person from Vijayawada or Vishakhapatnam or any of these places, they're all over the world. They're investing in different micro markets of
Yes.
the world. So it is very important for you to identify a micro market where there is an opportunity, infrastructure, study that micro market, and you could look at that market, whether it is any other city like Vijayawada or Vishakhapatnam. Vishakhapatnam seems to be a great story. Service industry seems to be heading that way. The government is very focused on bringing service industry. The minister there, the IT minister, is actively pushing in. The member of parliament for the Vizag area seems to be very dynamically pushing that location. They are genuinely interested in getting industry to their location and thereby improving the job quality, and thereby giving opportunity opportunities for investors to come in and make something out of it. But it's a slightly longer term story. It will play out. It will be great if we have, like, 4 5 opportunities within Telugu states for the investor to play.
Yes.
Other than it being concentrated in one micro market, it is always have multiple choices that way. So, but Amravati is a slightly longer story. It's a great story, but you need a lot of patience to get in, because some format of public infrastructure confidence needs to come in.
And this question is going on in my mind from, I think, the start of this podcast. I want to know the reason of this sudden stagnation in Hyderabad. I know that there's a lot of inventory, but again, there's even people think that the luxury side of the market is still good. So I would like to believe that it it might be good, but it is not as good as it should have been right now.
Yes.
So can you throw us some light upon that?
Three factors to be very. One, we're not seeing a significant slowdown in terms of this number of transactions, or the value of transactions seem to be the same, but somehow the West Hyderabad developer, which is the primary developer market, seem to have missed two categories: the 90 lakh sub 90 lakh category and the 1.5 category. So if you look at 70 lakhs to about 90 lakhs and about 1 crore to about 1.4 crore category, seems to be entirely missed.
Right.
The product is not available in this
West
catchment.
Side, yes.
So more people are having to go all the way 25 kilometers, 30 kilometers to pick up this property. Somewhere down the line, the property price growth and the wage growth, the real wage growth on ground, have not caught up. So it might take some time. The wage growth, if you look at IT industry, which is our main primary job growth driver, there the salary growth has not been great in the last 4 5 years. So the ability of the borrower or the consumer to borrow a higher ticket value is not there. So it's growing, let's say, about 8% or 10%. Suddenly in 3 years time, you're able to borrow a lot more money than what you were able to. But if it is growing at 3% or 3.5%, it really doesn't move that much. So in terms of percentages, it's compounding over your, suddenly, your salary grows by 3%. It's a very small growth. So that seems to be the factor. And more so, a lot of supply seems to be concentrated on everybody has built post-COVID, built those bigger homes, bigger ticket size inventories, whether it is 2,500 square foot 3 BHK apartments, or whether it is 4,000 square foot 3 BHK apartments. So the inventory seems to be a little skewed towards one particular kind of audience, but we are missing about 80-85% of the audience. And what we are doing is the mainstream developer is driving this 70%, 60% audience to local developers, or developers with little experience in this regard. So that is where the real challenge and opportunity does exist. The developer is coming at it because of open FSI. Most landowners are asking for sky and moon today. So the SFT that developer is committing as share in the joint development is not, and if you look at the auction numbers going to 70 crores, 80 crores, 100 crores, where you're having to build about 4 lakh, 5 lakh square foot an acre, it no longer, they have an option of building smaller apartments. They're trying to build large ticket apartments. So every developer seems to be addressing the same audience rather than trying to address a different set of audience. Whenever developer has tried to do a slightly differentiated product with smaller ticket sizes and a product which is in the lower category, I think there's been phenomenal success in that regard. If you look at headline numbers from some of the national players like Godrej and Prestige and Brigade, they've reported excellent numbers from Hyderabad in terms of sales. Even some of the regional players, branded players like ASBL and all, they've been reporting some phenomenal numbers from Hyderabad. We didn't see even projects where there has been real ready to use products. We're seeing a lot more traction there. We are also seeing good traction.
So the market is not stagnant there.
See, the market is not stagnated to the extent that, the price growth is stagnated, but the transaction growth is not really stagnated to
So
the.
the transaction growth is
Yes,
still the
yes,
same.
still the same. Yes, there is still a significant transaction growth, but the price growth in terms of the real price
Price
growth
growth
is not
is not
happening. Yes.
the same. So it's good time for these local builders, is what you're saying. They are
See,
doing better than that of luxury builder.
See, the luxury product again is a concentrated product. It is only in one micro market. But if you look at a lot of people, 50 to 60% of the people don't buy this product. They buy a
Yes.
1200 square foot or a 1500 square
Yes.
foot. They're buying purely for a need. That need is addressed by a local developer or
Correct.
somebody. There, the traction is still there.
Okay.
Some micro markets where the concentrated inventory in particular category, there is no traction.
Now talking about Dubai, there's an entire social media going gaga over Dubai investments. I want you to really tell who can actually invest in Dubai and who cannot, and who should be thinking of it.
It's a very interesting choice of opportunity if you are a sophisticated investor.
Now
Somebody
tell us when you address a sophisticated investor, who is a sophisticated investor?
Sophisticated investor is somebody who has an exposure to Hyderabad market or multiple markets as such, where you want to diversify your portfolio today. You've invested a lot more money into a big market like Hyderabad. You want to have an alternative exposure into other markets. Dubai is a very good opportunity if you're considering. Some people buy in US, some people buy in London, some people, for them Dubai is another opportunity.
So again, talking about Dubai, who should be investing in Dubai?
Who should be investing in Dubai? Somebody who has a slightly large portfolio in real estate already in their respective cities or countries should be looking at real estate investment in Dubai. Dubai is a plus one opportunity, should not be ideally a primary opportunity to
Okay.
look at, where you already have a deep understanding of the markets as such. Dubai does very good in certain areas, like it does very good rental yields. The property appreciation has been great in the last 5 years for Dubai market since 22 onwards, 21, 22, 19 also. Post COVID, the market has done phenomenally well in all asset classes there. It also presents a lot of good properties with views, and so there's a lot of opportunity in that regard. You look at, every city has their own growth cycles, hype cycles, and everything. So it's very important for you to understand that hype cycle and growth cycle with regard to Dubai also is going through it. So
Okay.
somebody who has an ability to weather these growth cycles and hype cycles, once if it isn't growing, you should have the ability uh, to withstand that hype cycle and then wait out till the market improves, and then put your property out for sale or put your investment out for sale. But in terms of rental yields, Dubai seems to be doing much better, especially in residential rental category. But you also need to have a very good understanding of micro markets in Dubai. Today there are very, like how Hyderabad today has a pan-India developer, a regional developer, a local developer. Dubai does have people like that. Some of the benefits there is that you can be protected against the growth rates of your respective region or country, because Dubai somehow seems to be a global environment wherein any growth cycles in any other country might help growth of Dubai. People can get money from any part of the world and invest, and they continue to do that even today. Indians are a big chunk of investors in Dubai. So are Russians. So are the English citizens from UK
UK.
primarily. So there are different kinds of investor coming into Dubai and putting their money. But it should not. I mean, we should not go by the social media hype cycle that it's a tax haven. It is a good place to invest in that way. You should understand the property. It is more like not the primary investment. It is when your portfolio is there and you want to de-risk your portfolio, or you want to add diversity to your portfolio, that's when you should look at Dubai as an opportunity. First, build a portfolio in your primary market, then approach Dubai as secondary market should be the idea for Dubai as such.
Right. And how is the market of Dubai in terms of its graph? Is it like a sturdy graph, or does it go up and down? What's like how up and down? So has it been, like you said, from COVID? The market has boomed there. Has
Yes.
it still been booming like all the time?
See, again, there are certain. I mean, this is a very high level answer to this question, but there seems to be some level of stagnation in terms of prices, even in Dubai at this point of time.
Right
But
now?
there could be micro
Okay.
markets which could be performing.
Well,
The government there has very actively invested in terms of real estate. They kind of push infrastructure to a great deal. They're constantly trying to get new locations. So it is very important for us to understand where is the government's push in that. Not only Dubai, there are different opportunities across the region, whether it is with regard to Abu Dhabi, whether it is regard to Ras Al Khaimah, or whether it is regard to Sharjah or any of the Emirati opportunities. There are different opportunities that are available, and you have to be clued into which micro market in that particular category or which micro industry. Like, for instance, Dubai is very heavily focusing on AI today. So how does that translate into job growth in a particular
Yes.
micro market? So it's very important for you to understand the micro markets of that particular city. The whole city does not have a singular behavior,
Right.
but few micro markets will present excellent opportunities in Dubai today, and few micro markets might be very, very heated also. So it's very important to understand. And Dubai is a very tourism driven industry.
Yes.
I mean, the lot of their revenue comes from tourism, and they're always trying to do something crazier every.
Yes.
Like, you have a ski resort in the middle of a
Yes.
desert, or you have the world's tallest building in a desert.
Yeah.
So they're always trying to do things that will attract a lot more tourism, lot more hotels, lot more Airbnbs, and so opportunity for rental and so on. So today you can get opportunities to invest in hotels, you can get opportunities to invest in Airbnbs. I mean, buy
Yes.
properties and put it on
Yes.
Airbnbs. Or a lot of expat community, a lot of migrant
Yes.
community does come into Dubai for
Yes.
short term, like 2 years, 5 years, kind of a thing, and then go back to their respective countries. So rental yields are always sharper and higher. So you have to identify the micro market where this is going to happen and pick up a property there.
And what I quickly want, if we could like throw some light on the benefits of investing in Dubai than investing somewhere in your own country, in India especially.
See, I mean, there's no particular. I mean, you one doing. You're diversifying your portfolio. Once you are a big investor, where you built up a sizable portfolio, and you believe real estate to be a chunk in your portfolio, it is always important to diversify. If you're seeing good, clean properties with good maintenance contracts, good rental yields happening, if that is the objective, then that is Dubai for you. It is not this or that. It is for people this plus that.
Okay.
It should not be like this or that. Ideally, if you are invested already very heavily into your local market, where you believe that a certain percentage of your asset you can take it to a market outside the country, then Dubai could be a first opportunity. If you look at a lot of NRIs, they already have certain investments in the cities that they are in. Like, somebody could have something in Dallas and they come back, they're hedging it by buying local in Hyderabad or in their respective natives. So it's all about hedging your opportunities and risk. Dubai should be looked at it as one other opportunity.
Yeah.
And then to hedge your risks, that's all.
That was an informative podcast, and I think we have been educated a lot about things that we did not cover before in our podcast. So thank you
Thank
for
you so
that.
much for your time.
Thank you.
It was very
Thank you
fun
for doing it.
conversating with you. Thank you for your time.